broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning. We are coming to you live from the CNBC-TV18 Motilal Oswal studios as always. I am Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Good morning, Nigel. Looks like it's not going to be such a bad day after all. We've had a bit of a recovery in the global markets. We've had some decent numbers as well. So all in all, I guess compared to what we've seen in the last week or so, today could not be such a bad day.
Well, that's right. And you have a better overnight handover. So that's pretty good news. And also, I think the next couple of days, we have big central bank action. So I'm sure we'll have to target that as well.
Today there is Bank of Japan, and tomorrow evening there is the Fed, so which we will react to on Thursday morning. Guys, let's just quickly tell you what you need to know as we always do and set the ball rolling. So we have had a pretty good last two-day bounce, right? Friday, the sell-off stopped. I mean, hopefully it stopped last Thursday. Friday we had a 200-point bounce on the Nifty. Yesterday we had a 100-point bounce on the Nifty. So that's 300 points in 2 days. Can't complain at all. Overnight, the handoff and the handover is pretty good. The US equities have bounced. The S&P is up about 1.2%. The Nasdaq is up about 1.16% as well. There is no real big driver in that sense, which has led to these gains, or rather one single driver, perhaps bits and pieces here and there. The Russell, by the way, was up. The Dow was up. So pretty much all indices across the board was a decent move. Now, two other things, right, which I think bode well for us. Dollar is weaker. I mean, actually, dollar sold off against pretty much all currencies. The composite dollar index is down about 0.4%. And oil prices, which had been threatening to sort of stay above 90, now they are closer to 87 or so as compared to 92, 93, which has been the recent high. So again, there are two other important things. Equities are higher. So you've got yields actually were up about 5 basis points, but we're choosing to ignore that for a while. You got the dollar, which is down about 0.5%, and the oil prices, which are down about 3% or so as well. Now, today, you've got the Bank of Japan meeting decision. I think we should have the decision out in the next 30, 40 minutes or so. Markets are watching closely whether there will be steps towards policy normalization. So there is something called the yield curve control, YCC. The Bank of Japan does not let yields in Japan, bond yields that is, government bond yields, to rise above a certain level. Because inflation is at 10-year highs in Japan, because market interest rates have been rising, pushing higher, will that policy be loosened a little bit? There's an article in the newspaper Nikkei which suggests that that is likely to be the case. So we'll have details in just a bit. And that's going to be important because the consensus before that article came out was that there'll be perhaps no change, very minor tweaks in that particular sense. So, but we'll know in the next hour, within the next hour. So two other things. We've got the Fed decision, which is, of course, tomorrow evening, which is tomorrow evening our time. And then, of course, the Powell commentary, which will also be important. And I think it'll be important also because of what the Bank of Japan does or does not do today. I mean, if there is a big normalization, Japan is the last big country which is sort of still in that very low interest rate, almost zero interest rate kind of environment. If they start to loosen things up, I mean, I think there will be implications, and we'll hear more on that. And, of course, what the Fed wants to do tomorrow evening. Any case, let's just come back and circle back to levels, etc. So yesterday's bounce, we got, as I said, a decent bounce. Same things repeated. No FII buying in cash. And shorts in index futures, FII shorts in index futures, that actually remains intact. Actually, if anything, from about 1.52 net shorts, that number has gone up to about 1.57. So, the market's bounced. So there is other activity, other participants, other players. The DI number was positive. It kind of completely negated that FI number. But day-to-day, kind of to glean what is happening and sort of, to get takeaways for prices based on daily FII institutional flows is very, very hard. And we've always said that. Let's just quickly take a look at the Nifty and the Bank Nifty. The Nifty first needs to cross the 38% retracement of the October fall, which stands at 19,280. It's about 140 odd points away from where we left off yesterday. So that is it's the first sort of meaningful resistance which the markets need to climb above. The Bank Nifty yesterday ended almost exactly at that 38% retracement. So, since we are there, the next two levels are the 200-day moving average, which stands at 43,188. That is the simple 200-day. And then you got the 50% retracement. So we are at the 38. The 50% retracement is at 43,348. These are again very near-term levels. You got to take it step by step because the decline was almost waterfall-like, very, very steep. So you got to take these recoveries on a daily basis as well. The small cap index, yesterday, I mean, they were middling. Both the mid-cap and small cap indices, nothing very large happened. But the small cap index is now almost at the 61.8% retracement of its entire fall. I mean, that fell 7% and we're already at the 61.8% retracement. So in a way, that's the strongest of the indices. It fell the most, but it's also recovered the fastest. And the number is at about 12,728. We left off at about 12,657. The GIFT Nifty will come up on your screen. It's a constructive kind of environment. A 6-point downtick is what the GIFT Nifty is indicative of. If you're trading, you'd wish that that's not 5 points, that's 30, 40 points lower in terms of a start, because that will give you a bit of a bounce. Remember, the market's put in 300 points on the Nifty in the last 2 days. So there has been a bit of a meaningful bounce. Not to say there can't be more, but you got to take each day as it comes. And today, the backdrop is positive. Sonia.
Absolutely. And there's a playbook here, right? Every time there is a geopolitical crisis, the market now understands that buying the dip has always worked in their favor. So this time around as well is no different, although it may be too soon to tell if this is a consistent recovery. But for now, the recovery is definitely underway. Just look at the way the Nifty has moved, right? The low that we hit on the 26th of October, in the peak of this Israel-Hamas war, was around 18,850, and the market is already up about 300 points from there. The US markets have seen a sharp rebound overnight as well, almost a 500-point, actually more than a 500-point rally is what we saw on the Dow. And there was large buying by domestic institutions in our own market as well. So we saw about 1,400 crores, 1,329 crores of buying from domestic institutions. Brent crude has cooled off to $88 a barrel. There are still Middle Eastern tensions, but nevertheless, despite all of that, Brent crude has now come off, which is, of course, a positive for markets like ours. The FOMC decision is keenly watched tomorrow, but there's an expectation that there would be a pause this time around. But given the way US bond yields are rising, that remains an important event. A couple of stocks that I'm watching today, and we have some good numbers coming in from a lot of, non-index large caps, if you want to call them that, whether it is TVS Motor, whether it's DLF, whether it's Blue Star. Something like a Spandana Sphurti has reported very good numbers. And, for a company like TVS Motor, record high margins, 11.1% margins is what TVS has reported. DLF has seen its highest ever collections. Blue Star has reported a 20% growth. And something like a Spandana Sphurti has reported, 70% AUM growth. So lots of good numbers that the street will look at today, and we'll be tracking all of that very closely. Looks like it's going to be a decent morning.
Well, that's right, Sonia. I just want to make 3 big points. One is with regard to October. I remember the start of this month, we were saying it's traditionally good for the bulls. Well, the bears have made a comeback. Yeah. The second factor is the bounce has been good, but it's come on very, very low volumes. And the third factor is today we have the Nifty Financial Services Index that plays out expiry. So I'll get to the Nifty levels. Let's focus on the first point, though. October. Well, the bears have made a comeback, and it's a bit of a rarity because it's the only second instance in the last decade where you have the Nifty that's going to be ending in the red with a cutoff around 2.5%. The last time we saw was 2018. For the Nifty Bank, well, it's the first time in close to a decade that we saw a negative month in the month of October. The last time we saw this was in 2012 odd. Now, the bounce, bulls will take it with both hands. But, they'll enjoy it. They won't be complaining about it. But actually, there are a couple of points that you need to highlight out here. Now, yesterday, if you look at the volumes, they were very, very low. The volumes yesterday on the NSE, cash market volumes, were 15% lower than the October average. So it was at around 58,000 crores. On an average, we've seen 68, 69,000 crores. That's point number one. Secondly, the FIs. In the cash market, the gross volumes are 20% lower in comparison to the October averages as well. And yesterday's move, more than 65% of it was led by two heavyweights. One is Reliance Industries as well as HDFC Bank. Both of them did well, and 68% of yesterday's move came in only because of that. And finally, with regard to yesterday's trade, yes, the Nifty ended higher, but your portfolios won't be feeling too good because the mid and the small cap indices actually were lagging in yesterday's trading session. So the bounce has been good, but these are a couple of points that you should be noting. What do the FIs do? Well, we were talking about them being net short. On Friday, I recall we started a new series and everyone was saying, hey, they are very, very aggressively net short. But we made this point. The last time they've been so aggressively net short, actually the series wasn't too bad. And for the time being, in fact, it's working out that way. Yesterday, they have added more shorts as well, close to 6,000 short contracts. So in absolute terms, 1.57 lakh contracts on the short side. In percentage terms, it's at around 88%. Options data, well, the 19,000 put was fairly active in trade. The premium started off close to around 75 rupees. It ended at around 35 rupees. So going back, there is some writing at that level. And the last two sessions, we've gone to 18,930 and bounced off that. The 18,900 mark becomes crucial in terms of a support. If we breach that, then the recent low, 18,838 is what you're looking at. While on the upside, the 19,250 to 19,300 positioning is such that we don't get past that level. The Nifty Bank, well, that's made a comeback as well. Even in yesterday's trading session, it did bounce up. It's hovering around the 200 EMA. You want the Nifty Bank to cross this and trade about that. Try to make a dash towards that 44,000 odd mark. So that's a crucial level. For starters, well, we're going to be starting as flat as can be. But as I said earlier, the bounce has been good. However, volumes have been on the lower side. So you want to see an up move on higher volumes. That's what will give the bulls some bit of confidence.
Okay, and we also have a lot of big events, right? Apart from the FOMC meeting, there is the auto sales numbers for the month of October that come out tomorrow. So, that'll give you an indication. They're generally a barometer, a sentiment barometer, so we'll be tracking that very closely as well. But on the equities front, we have Sanjeev Prasad of Kotak Institutional Equities, who says that their analysis of the top performing mid and small cap stocks suggests that the outperformance may have been driven by a combination of a few things. First is improved fundamentals in a few cases. Second, a strong narrative in many cases. And third, possibly low free float. Many low free float stocks have seen a sharp surge in delivery volumes, which may reflect the market's heightened expectations. The outperforming companies may need to show greater improvement in their financial and operating performance for their recent strong stock performance to sustain.
Okay, well, that's Sanjeev on equities, but let's get you some money market views as well. This is Abhishek Goenka of IFA Global, who says that despite risk aversion given war-related uncertainty, collapse in forward points due to dollar shortage and continuing outflows on account of FPI sell-off in domestic equities, the dollar-rupee pair continues to remain incredibly resilient and sticky. He says all eyes are on the Fed meet tomorrow. Overall, he expects the rupee to trade between 82.7 to 83.7 to the dollar in the medium term.
Okay, and on the bonds, Ajay Magnolia of JM Financial says that the market is expected to be steady due to lack of any significant domestic cues. He expects the US Fed to pause tomorrow. He says rising fear of open market operation sales by the RBI in November is keeping traders at bay, and expects the 10-year benchmark bond yield to trade in a narrow band of 7.35 to 7.40% today.
Well, there's a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. But for the time being, we run you through the list. We're looking at Marico, TVS Motors, GMR Airports, DLF, SRF, Blue Star, Spandana Spurti, and Vesuvius, all of them on positive news flow. While on the flip side, UPL and Butterfly Gandhi Mati, they'll be reacting to negative news flow.
Okay, Mark Matthews is now joining us of Bank Julius Baer. Mark, good to have you with us here. Thank you very much for your time. I mean, the last we spoke, Mark, at the margin, you sounded a little cautious, if I remember correctly, on the outlook for global equities near term. Do you maintain that?
Well, to be honest, Prashant, I can't remember what I said. So I'm glad I said that, if I said that, because markets have come down. And I think that we're getting into a decent price range here for the S&P. We've had this big sell-offs in September, basically lost half of the gains that we had added on from January up until September. And so I think that a lot of bad news is in the price. And of course, the major thing that impedes the market from heading higher is the very high yield that one gets in the bond market. That's what's stopping the stock market from going higher. And I think we'll just have to get used to these high interest rates in the bond market. I don't think they're going to go away very soon. I don't think they're going to go away essentially until the economy starts slowing down, and there's no sign on the horizon of that happening yet.
Yeah. Do you not remember what you said, Mark? Because it's been all muddled, because there's no clear sort of drivers up or drivers down in a big way, right? It's over and over, up and down, repeat action, or yeah.
Yeah, the positive driver is, of course, the earnings, and they are good. So we are going back into a positive year-on-year earnings growth situation for the first time in 3 quarters. And ultimately, what drives share prices is earnings. So that's the most important thing. The third quarter earnings have been good. But the thing that, as I said, just stops stocks from significantly moving higher is this wonderful, let's call it around 5% interest rate you get in a bank deposit. And why bother taking a lot of risk when you can make 5% in a bank deposit?
Mark, hi, good morning. So what do you do in the market now? Because, at this point in time, there is a slight recovery from the lows as well. So looks like the market has perhaps factored in the worst of the geopolitical crisis for now. It may be too soon to tell, but as we head into the last, 3 months of the year, or last 2 months of the calendar year, what's your approach towards markets like India?
Well, markets everywhere, I think, are going to rally into the fourth quarter. So I'm kind of contradicting what I just said. But there is this wonderful seasonality that we've had this year. What I mean by that is the market has essentially tracked its seasonal average of the past 70 years with a correlation coefficient of 0.9, which is very, very tight. So I do think that we can rally into the end of the year. Yes, there is bad news in the world, particularly in the Middle East, but I think that it's not enough to stop a year-end rally. And then into next year, once again, it all depends on bond yields. And I guess what I would say is that there is a delayed impact of interest rates, and it can be a very delayed impact because a lot of people, they've already got loans, and those loans, they don't mature until a certain time period. So I think it would be around next year when you'd start to see many of the loans needing to be refinanced, and then you'd see the higher interest rates start to hurt, and the economy start to slow down. And so actually where that would lead you to first and foremost is investment grade corporate bonds, because that's where you get a wonderful yield of somewhere in between 6 to 7% in the United States. And historically, they've had extremely low default rates, less than 1%. Everybody's been saying this for some time, though, that bonds are the place to be. So it sounds like a bit of a broken record, but I think it's still true. And as for the stock market, I just think it's a good thing to buy and hold for the long term. But of course, you've got to own the right country's stock market. Many countries in the world, unfortunately, their stock markets don't provide good returns, and there's multiple reasons for that. But the good news is that India is one of the countries in the world that has a stock market which has provided good returns. We all know that, of course. And I don't see any reason why that should change. In fact, China is just the boy who's cried wolf one too many times. I think even if they start to get it right, you're not going to see big inflows into that country. And India just stands right at the top of the pecking order in the emerging markets.
All right, Mark, we will leave it at that. We always love to hear that, right? As Indian investors, that India stands tall and on top of the pecking order in emerging markets. We hope it continues to stay that way. But thanks a lot for joining in and giving us your perspective on the market. Let's slip into a quick break on that note. On the other side of the break, our list of top 10 stocks is lined up with our entire research team. Stay with us. Welcome back to Bazaar Morning Call. We have plenty of stocks to talk about today, actually. So let's get our entire research team on board. Marico is the first stock we're looking at. Mangalam is here to tell us how the numbers look. Mangalam, good morning.
Good morning. So for Marico, it looks like it's a mild beat on the revenues, and the EBITDA and the net profit have been above the poll. So, so far we've seen most of the FMCG companies report revenues which were slightly below expectations. That's not the case with Marico. If you look at the revenues, 2476 crores, the street was working with a number of 2465 crores, so a couple of crores higher than that. The EBITDA came in just shy of 500 crores. The street was working with a number of 485 odd crores. Margins coming in at 20.1% and the net profit being above expectations as well. Even the volume growth at 3% is at the higher end of expectations. The good part is that the management outlook is rather positive. They believe that revenue growth will move into positive trajectory in the second half of this year. The gross margin uptrend has been upgraded from around 150 to 200 basis points to 350 to 400 basis points. Even if they plow back some of those in ad spends, the EBITDA margins are likely to improve by about 200 basis points. That too is higher than their earlier estimate. And food and premium personal care, which has been the growth driver for the company, will grow to 20% of sales versus 15% of sales. So see some green on the stock, largely because a lot of the negatives have been priced in when the company reported their second quarter update already.
Okay, thanks a lot for that. Well, the other stock I'm looking at is TVS Motor. I'm going with green over there because the numbers were very good. In fact, it was a record high EBITDA as well as margins that the company delivered this time around. And the earnings were quite strong, largely in line with estimates. The EBITDA margins came in at 11.1%. If you remember, TVS for the last many years was struggling between 9 and 10% margins for the longest time. But this quarter, it's the highest ever quarterly operating EBITDA of 900 crores. That's largely because raw material costs have fallen and the product mix has improved for them. So just take a look at it. 90 basis points year-on-year improvement in margins for TVS Motor. Revenue growth in double digit, about 13% growth is what we saw. EBITDA went up by 22.2%, and this at a time when exports have still not recovered. So a lot of positive brokerage reports indicate that once the export piece starts recovering, then TVS Motor will, be a big beneficiary of the revival in the export market, and hence they're expecting better numbers. So I'm going with green over there.
Okay, all right, going with green for TVS Motors. But let's hop across to Vivek. He's here to tell us about GMR reports. Morning, Vivek.
Well, good morning. It's a strong operational performance. Operational metrics across all parameters have improved. However, the bottom line has been a loss, but still going with the green on this particular name. Revenues on a year-on-year basis higher by 30%, mainly on account of improved passenger activity. So total pax traffic has actually improved by 25% on a year-on-year basis, coming in at 26.5 million passengers. Now, the EBITDA is up 55.2% on a year-on-year basis, and margins have expanded quite significantly, this time around coming in at 35.2, more than a 500 basis points expansion. However, on the bottom line, due to increased debt and increased finance costs, the company reported a loss of 190 crore. A couple of important things that the company has said. Number one, there has been significant progress as far as the complete merger of the parent company is concerned, and there is a shareholder meeting kept on December 2nd. Along with that, the company has also said that it's looking to refinance the debt of GMR Airport. And lastly, the company has said that they will complete the ongoing expansion of Delhi and Hyderabad airports within FY24 itself.
All right, Vivek, thanks very much for that. Well, let's move on. There is DLF, which reported numbers. UPL came out with numbers, I think, during market hours, but there was a guidance bid, etc., and SRF as well. Sonal is here with views and sort of insights on all three. Sonal, hi, morning.
Good morning, Prashant. Let me start with DLF, where the numbers look good. In fact, they saw collections which came in at highest ever level at around 2359 crore rupees. Surplus cash flows were at the highest at 1,147 crore rupees. And this time around, company has turned net cash, which again is a big positive. They were net debt till last quarter at around 57 crore rupees. Residential sales, they are up 8.5% on a YOY and on a quarter-on-quarter basis as well. And company says they are on track to achieve their residential sales guidance of around 13,000 crore rupees in FY24. For SRF, there was a conference call yesterday where the company said that they are able to guide for a single-digit growth in their specialty chemicals business at a time when across the globe there is a guidance cut coming through. They are saying that although demand is subdued, there are no order cancellations. In their fluorochemicals business, they are expecting recovery in the second half in both domestic and international markets. However, packaging films business will continue to see some pressure, but technical textiles will be stable going forward. For UPL, the guidance cut was the big negative that we saw yesterday, but the company says they expect to deliver better profitability in second half versus first half. High cost inventory, higher liquidation and rebates to channel partners hit the contribution margin in UPL SAS business for them this time around. But in the third quarter, El Nino will be a major monitorable across geographies for them as well, and they will reduce their capex as well by $50 million from its earlier capex guidance of $300 to $325 million. So across the board, we've seen guidance cuts for UPL, and the conference call also spoke about some of the issues that persist right now.
All right, thanks a lot, Sonal, for that. Well, Blue Star was the other good set of numbers that came through. Surbhi's tracking that. She's also looking at Butterfly Gandhimathi. Surbhi, hi, morning.
Good morning. So Blue Star, really strong set of numbers. The revenues were up 20%. The EBITDA was up 43%. The company saw margin expansion of 90 basis points. PAT was up 66%. Now, unitary products, which is 39% of their revenues, that is what drove the higher revenue growth. The revenue over there was up 39%, and the profitability was up 90% on a year-on-year basis. So good set of numbers from Blue Star coming in. Butterfly Gandhimathi will be in focus, and that is because the public shareholders of Butterfly has rejected the proposed merger with Crompton. Now this means both Crompton and Butterfly will continue to operate as separate entities, and Butterfly will continue to remain Crompton's subsidiary. Crompton's management has said that development will not have any significant change in the growth strategy, and the companies will continue to operate as separate entities and work towards fulfilling the mutual strengths. So the initial tick on Butterfly could be red, but we expect the stock to recover from there.
Got it. All right. Thanks for that, Surbhi. Let's hop across to Abhishek. Abhishek, how was Spandana Spurti's numbers?
Well, it looks like the tenure of the book increased in Q2, and that's aided the AUM growth this time around. Asset quality has improved. Gross NP ratio is down to 1.4% versus 1.63% in the previous quarter. Looks like high write-offs have actually aided the asset quality this time around, given the fact that provisions are up massively on a YY and sequential basis. So disbursements are up 81% YOY and about 51% quarter on quarter. Disbursal to AUM ratio that I calculate is around 37-38% versus around the 20% mark that was there same time last year quarter, and even in the previous quarter as well. AUM growth of 69.2% YOY and about 10.5% sequentially. Net interest margin largely stable, just down by 10 basis points quarter on quarter. Yields have aided the net interest income this time around. Net interest income is up 87.5% YOY and about 24% sequentially. Other income was robust, up about 145% YOY and 96% quarter on quarter. As I said, it might have been high write-offs that aided the asset quality because provisions are up 264% YOY and about 261.5% sequentially. PAT grew by 135% YOY and about 4.5% sequentially. Back to you.
Okay, Abhishek, thanks a lot for that. Well, I'm looking at Vesuvius, and yet again, the last couple of quarters I've been mentioning this, that the numbers are a beat, and yet again the numbers are a beat because they look very, very good. On the top line, there was a growth of close to around 17%, but the EBITDA growth, that was more than 60%, which takes the margins higher as well. And the key reason is gross margins have increased big time. If you look at it, it's gone to around 46%. So a better mix, lower cost, that's what helped the margins now move to around 20%. And that's the highest we've seen in many, many years. I think the last time we've seen margins like this, maybe it was in 2017, 2018. The profitability as well got a boost up because other income is higher. Remember, as a percentage of the total market capitalization, cash in books is around 600 crores, and that equates to nearly around 9 to around 10%. So the numbers look good. The stock has seen a big run already, but I expect the stock to open up well in the green on the back of these blockbuster numbers.
Okay, so a lot of good numbers is what we're looking at this morning, whether it's TVS, DLF, Blue Star, Vesuvius. The list is pretty long, so let's take a look at it. Stocks with positive news flow. There's Marico, TVS, TVS Motor, GMR Airports, DLF, SRF, Blue Star, Spandana Spurti and Vesuvius. While stocks with negative news flow, there's UPL and Butterfly Gandhimati. But what's another positive trigger for the market is that Brent has cooled off. Brent crude has cooled off a little bit. There's no de-escalation just yet. There's no ceasefire just yet as far as the Israel-Hamas war goes. But Brent has come off a tad bit, perhaps in anticipation of that. Manisha Gupta is joining in with a quick roundup of all the action that took place overnight. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, absolutely. The crude oil prices fell 3% overnight, and WTI fell almost 4% at one point in time as well. While it has been about some profit taking on the higher side, we haven't seen crude oil supplies being impacted with the conflict in West Asia, and that took the premium off. Also in the morning today, the Chinese manufacturing numbers as well as the services growth, both those numbers came in on the weaker side. That's weighing on as well. The 0.5% increase that you are seeing on your screens right now comes in after the World Bank suggesting that if the conflict continues to escalate in the next year, then the crude oil prices in a worst-case scenario could rise as high as $157 as well. So there are all those numbers floating around, and that led to some opportunity buying coming back in case of crude oil prices.
All right. Manisha, thank you very much for that. And we'll keep coming back to you to get the latest on commodities, oil specifically. But for now, oil is well behaved. It's down from that 90-ish kind of levels. We'll take a quick commercial break here. We'll come back. Our first guest on the program on markets will be here. Siddharth Khemka, Motilal Oswal Financial Services, will weigh in on stocks. Lots of earnings to react to. We'll also have the first management join us in just a bit from now. Sandeep Sangwan of Castrol India to talk about their quarterly performance. Stay tuned.
Welcome back. Well, for starters, we like to start off more or less flattish. The good news overnight is US markets ended in the green and crude oil prices have cooled off a little bit as well. But we listed down all the top 10 stocks that we're tracking. Let's get to some fundamental analysis on each of them. Siddharth Khemka, the head retail research at Motilal Oswal, joins us on the show. Hi, Sid. Good morning. Thanks so much for joining in. Well, tell us about TVS Motors. That's been the big outperformer. The numbers were pretty good. Sonia just told us about that. How would you approach the stock at around 1,600 rupees?
Yeah, very good morning, Nigel. Good to be on your show early morning. So I think results have been pretty good. However, we were expecting the good set of numbers from the auto sector itself. So more or less operationally, the numbers were in line with our expectations. It recorded highest ever EBITDA margin of 11%, and which was an increment of 40 basis points on a Q-on-Q basis. And we believe that there is further scope for margin improvement in coming quarters, led by operating leverage, lower marketing expense, and there would be a strong earnings growth driven by recovery in the underlying segments, as we expect the margin improvement to be there. But on the flip side, what looks like is that the valuation seems to capture this upside, with almost stock trading at 35 times FY24 and 30 times FY25 P. So that we believe that there could be little room for upside, given that the other two-wheeler companies are trading at a steep discount. So while we are positive on the overall earnings and the growth trajectory, the valuation looks capped, and hence we are kind of a neutral rating on TVS Motor.
Okay, that's interesting. You have a neutral rating on TVS Motor. There's also a bearish view. Nomura has in fact downgraded the stock to a neutral. They have a target price of 1760. I think the one concern is that the subsidiaries continue to be loss-making. So there's a bit of a drain, right? A cash drain on that front. And that may sort of put a lid on the gains. And the stock, of course, has rallied a lot. But Siddharth, good morning and thanks for joining in. There are plenty of other stocks that I do want to talk about. DLF is the other one. Highest ever collections this time at almost 2,400 crores. And the commentary from all other developers, whether it's Macro, Tech, Prestige, is that the going is very good. From this entire lot, what are the stocks that you prefer in the real estate space?
Yeah, so if you look at, I think a lot of these real estate companies, they have been announcing, at least on the operational front, which is the pre-sales data has been pretty strong. And even for DLF, you've seen that some of the luxury segments that they have launched have all been lapped up in record times. So I think that is something which has been a big positive for the entire real estate space, where the demand, despite the increase in the interest rates in the last few quarters, demand has still been pretty strong. We also had the macro tech numbers, the Oberoi Realty numbers. So within this space, we like two stocks. A is the Godrej Properties, and B, macro tech developers. They also came out with numbers. They reported sales booking of 35 billion, which was up 12%. Overall sales stood in line with our expectations. And with this quarter, if you see the total first half pre-sales of almost 70 billion is up 15%. And company has achieved 50% of its pre-sales guidance. The management commentaries regarding the festive sales and festive bookings have been pretty strong, not only for the real estate sector, but I think across the industries. The festive season, at least so far, has been pretty good, and we will still have the upcoming festive season of Diwali and the New Year. So I think it looks pretty good. And as I said, within that, we prefer a macro tech developers, where we have a target price of 900, and Godrej Properties, where we also have a buy rating.
Got that. Siddharth, hi, good morning. There's actually so much to discuss, right? So many numbers. M&M Finance sold off 10% yesterday. There was an AU Bank acquisition. By the close of it, the market didn't, I guess, like it, at least the first cut. AU Bank was down sharply. But I want to talk about Supreme Industries, which reported numbers. By the way, we had the management with us as well. Supreme Industries rallied some $400-500 in the last 30 minutes of trade yesterday. And huge move. Numbers came a little earlier. There's almost a full 1 percentage point increase in margins for Supreme in the second quarter. Any thoughts, Sid?
So, Prashant, unfortunately, we don't cover Supreme, so I have not had a look at it.
What about the other two, M&M Finance or AU Bank? Would the second quarter numbers for M&M Finance be a durable derating kind of event, or people will come around to this one?
Yeah, I think if you look at M&M Finance, PAT was a sharp decline, 48% decline, and even a sharp miss, 44% miss. But as you said, yes, I think until the 2 quarters ago, M&M Finance had managed to reduce its volatility in its NIMs and had shown sharp improvement in its earnings performance, led by streamlining of operations, enhanced risk management. But has now they have reported 2 quarters of back-to-back earnings miss in a kind of way, which is kind of leading to these pressure in the overall numbers. I think the management is guiding for a change in the product mix, and overall growth, I think, will remain pretty stable. So having said that, I think so we have a positive view. We believe that M&M Finance is going through a transformation in its product and customer mix. NIM profile will change and will find a suitable normal where the market will also find some time to adjust to the new change. Valuations are now comfortable at about 1.7 times FY25 price to book. So we believe that risk reward is favorable, but there could be 1 or 2 more quarters of pain where the transition keeps happening.
Okay, all right. Siddharth, we'll just come back to you in a bit, right? Because we have a management joining us now. It's our first corporate interaction of the day. Castrol is on our radar. We have seen volatility in crude oil prices because of geopolitical tensions that has impacted the company's quarterly performance. The revenue growth for Q3, they have Q3 of calendar year, has been quite muted, while the margins are stable at nearly 23%. Sandeep Sangwan, who's the Managing Director at Castrol India, joins us now to discuss their quarterly performance. Sandeep, hi, good morning. If you can just start by telling us what exactly was the volume growth that you clocked in this quarter, and can you split the revenue growth for us into, both volumes as well as realizations?
Yeah, so I think, first of all, thanks for having me on your channel. Good morning, everyone. We are very satisfied with the growth that we've seen. Our revenue growth is 6% versus Q3 last year. And on a sequential quarter basis, the Q3 tends to be the lowest quarter that we have historically. It's about 23%. And our volume growth has been double the market growth rate. So our volumes grew at about 8% in the Q3 versus last year. So we're quite happy, and we see momentum coming back. And I think the new product launches are gaining good traction. We launched Castrol Auto Care, a range of products which are available in 18,000 outlets now. We launched that in May. We launched a Magnatech SUV variant, which is gaining very good acceptance from consumers and customers. We continue investing in our brand. In fact, in Q3, our investment was at higher levels because we launched a new campaign on commercial vehicles, Badhte Raho Aage. We did a digital media campaign around Bharat GP on the motorcycle division, and we continue making progress on sustainability agenda. So all our small bottles have 30% PCR now, post-consumer recycled plastic. We've reduced about 1,800 metric tons of carbon. One of our plants is on fully 100% renewable energy now. So I think we're making good progress across all the key strategic areas that we want.
That's fabulous, the move towards sustainability. But just some more numbers. You said you clocked in an 8% volume growth in this quarter. What can you do by the end of the year? Can you get to double-digit growth in the next calendar year?
So I think we see volume momentum coming back, and that's been one of the things that our investors have been always asking us: can you drive the volumes at a much higher level? And that's what we're pushing for. Now, it's very difficult for me to forecast next year, but the intent is to drive top-line growth while holding the margins at about 23%, and that's what we've said as a management team, and we are able to deliver against that.
Right. Sandeep, hi, good morning. What's your market share now in the high 20s?
So I think if you look at the retail automotive market, which is the aftermarket, that's where most of our business is, we are in the 20s. Okay.
Because even, I've been watching all these ads, lubricant engine oil ads on television. I mean, they're all over the place on the World Cup telecast.
Absolutely.
A lot of competition, right? For an industry which is actually growing at about 4%, There's Chevron here. There is, there's Mac, which is the public sector sort of company, and there are others as well. So, what does it mean, this level of competition for a market which is not growing very fast? You are doing much better, but do you think it'll impede your plans?
So first of all, we used to having good competition, and good competition always challenges us to do better. Fine. The other thing where you see so many brands and becoming active in India is because India is going to be one of the lubricants market that will continue growing well into the late 30s, given the low penetration of cars. And that's why you see a lot more competition, even international brands coming to India. And we are fully cognizant of that. And that's why we continue investing in our brands, and also continuing to scale up our distribution efforts. We are the largest distributed lubricants brand in the country. We cover almost 100,000 plus outlets. And now we're beginning to make a push in the semi-urban and rural areas to continue on that growth trajectory. So good competition is always welcome and challenging, keeps us on our toes. So very happy for that.
All right. Hi, Sandeep. Good morning. You said your volume growth was around 8%. That would tell you that pricing is more or less flattish, a little bit lower on a year-on-year basis. We got the margin number as well, but you also briefly mentioned about new launches. New product launches as a percentage of your mix, how much is it? Where do you see this number headed? And what kind of capital expenditure would you be doing for this segment?
Yeah, so typically we have 3 plants in India, and typically we spend our capital both in upgrading and maintenance of our plants, and then we spend other part of capital, which is retail signage and in the retail trade. So typically we spend about anywhere from 80 to 100 crores, and that capital expenditure would continue going forward, and possibly will continue to increase our spending as far as the retail branding is concerned going forward as we expand into rural areas. Sorry, I missed your first question.
The new products, the new products as a percentage of your mix.
Yeah, the new products, I think, typically start at about 1-2% of contribution in the first year. But as we see them grow over the years, typically we would want them to start contributing about 4 to 5%. So.
Okay, and what's your balance sheet looking like? If you could give us
so we have a very healthy balance sheet in the sense of we're sitting on cash reserves, which we're looking at opportunities to deploy. So from a balance sheet perspective, we are very comfortable. We are a debt-free company with healthy margins, healthy cash reserves. So that gives us all the capital that we need to drive further growth in the coming years.
All right, we'll let you go on that note. Thanks a lot for joining in. That's Castrol. Quite optimistic, actually. The revenue growth at 6%, volume growth at 8% in this quarter. They're a debt-free company, and they hope that the volume momentum continues. But let's get back to the market. Looks like there's going to be a decent opening today, led by the recovery in the global markets. Anuj is here with us this morning to talk more about that. Anuj, just some recovery coming through.
Morning, Sonia. Yes, indeed, some positive vibes for the market. And you know what? Yesterday's price action was extremely positive for the bulls. I mean, it almost had everything. The market first collapsing, then taking support, making a higher low, and then bouncing by about 200 points. The one reason perhaps the GIFT Nifty is still showing a downtick maybe is because you have sort of already preempted this big rally in the US market. And this morning, actually, Asia is a bit soft, plus US futures are a bit soft. So in that sense, very strong price action. The advanced decline, which started very poorly, actually ended in favor of declines. The mid caps had a huge recovery yesterday, so that's also positive. But you know what? There's a couple of things. Fin Nifty expiry today and Bank Nifty expiry tomorrow, and they in the past have not been good for the market. The Fin Nifty and Bank Nifty expiry combination. Though Reliance is showing signs of leadership, so that's looking quite interesting. The other thing I'm watching out for is, of course, the FOMC meet, and within that, what's clear is that now, 98% probability is of a pause. That's what the Fed funds futures seem to be indicating. I think that could be a big cue for the market from here on. And IT stocks could lead the rally, the next rally, if Fed indeed pauses. That would be an interesting thing to look at. The domestic numbers have been strong. Both Marico and TVS looking stable. And today, of course, you have some big numbers, L&T, Bharti and Tata Consumer, L&T being the most important one. I'm restricting myself to Nifty today because the Bank Nifty is still all over the place. The first support is 19,040, which is options based, and bigger support is 18,940. Yesterday is low. On the upside, the first resistance comes in at 19,268 options based and 19,347, last Wednesday's breakdown point just before the expiry. That would be your resistance point.
Okay, all right. Thanks a lot for that, Anuj. Well, for the time being, though, we'll slip into a short break. On the other side, we'll be joined by technical experts. We'll tell you how trade setup is looking, and we'll also get you a couple of F&O calls later on.
What does...
Okay, welcome back. There's 11 minutes to go for the pre-open session. Mitesh and Sudarshan are with us with what they'd like you to do with where we are. So 15 points lower on the gift nifty is what we have on as far as the indication is concerned. Gentlemen, good morning. Good to have both of you here this Tuesday morning. Mitesh, you go first. What's the strategy?
Morning, Prashant. I've been advocating, some kind of sell on rallies kind of strategy, and I believe that for the Nifty, 19,230, 250 zone would be the area where the index is likely to face significant supply. Similarly, on the Bank Nifty, the corresponding level is close to 43,400, 450. So I think these are the areas. If we see any sign of weakness over there, I would want to get into short positions, purely because my belief is that the short to medium term indicator setup is on the negative side. Of course, we are bouncing back purely because we've had a few days of decline. But unless until we see strength beyond the levels I mentioned, I think it will be a market which will remain weak eventually.
Hey, Sudarshan Sukhani is also with us. Sudarshan, do you feel the same that despite the kind of bounce that we might see today because of, the recovery in global markets, this is an inherently weak market and the selling pressure could continue? Is that how you feel?
Good morning. No, Sonia, I have a different view. Yesterday, I had suggested going long with tight stop losses, and that view continues. See, it's quite possible that this market may enter into a choppy trading range. So it is likely that we can go down also, test the lows, break the lows, but it's not necessary that we'll have a tradable downside move. That's much more difficult to predict. So the trend is up. We've had a big decline. It's much easier to go with the primary trend of the market, given the fact that we already have a decline behind us. The trade for the day is to look for intraday opportunities to go long in the Nifty, avoid the Bank Nifty. Tomorrow will be different. We'll have to take it day by day. But I think the choppy market deserves buying, not selling.
Okay, what about individual stocks then? Okay, let's do one thing. Let's take a quick break. We'll come back on the other side of the break and discuss a lot of the stock ideas. We will also have with us the pre-opening rates. Siva Ramakrishnan Ganpati of Gokuldas Exports will also join in to talk about their Q2 earnings. Stay tuned.
Powered by.
Welcome back. Well, let's get some stock ideas out of the way now. Sudarshan Sukhani and Mitesh Thakkar are still with us. Sudarshan, what's on your list in terms of buys and sells this morning?
Well, it's mainly a buy list. Coal India is a buying opportunity. The stock is in an uptrend. It's doing the exact opposite of what the Nifty was doing. It's outperforming. So buy with a stop under 290. ONGC had a decent correction, and then it has had two very strong updates. That uptrend should continue. It's broken out of a resistance level. Buy with a stop under 184. Tata Motors is my only intraday short. Intraday short because it's broken down from a resistance, a small trading range. It's now sliding down. Maybe it's looking at a deep correction. Intraday short with a stop above 644. TVS Motors is a buying opportunity. See, two different stocks in the same sector have different stories. It's a buy with a stop under 1556.
All right, and Mitesh, what about you?
Yeah. I have a few more buy calls than sell calls. So Persistent was something which I recommended earlier. Now is a buy with a stop at 5985 for targets of 6,300. Reliance is a buy with a stop at 2294 for a first target of 2350, 2360. Though I think a bigger reversal will take place once Reliance manages to get past 2360. Also a buy on GNFC with a stop at 674, targets of 705 here. and a sell on Britannia with a stop at 4,500 or just above that, and a target of 4,375 is what I recommend.
Any thoughts on Supreme Industries? Ended about 8% higher, and bulk of that move came in the last 30 minutes. How's this one looking?
Prashant, actually, the move was very good. And if you look at the overall pattern, it's been doing a range of about 4,700 to about 4,3,900. But this move does suggest that, one, the stock should head towards the upper end of the range. So a test of 4,700 looks likely. Closing above that should add further momentum, and I would then look at targets of 5,000.
Okay, we're just about, I think, getting the pre-opening rates. Okay, we'll get them in about a couple of minutes from now. Siddharth Khemka is still with us. So let's go to him. Siddharth, there were many other, good numbers that we saw. Nigel was speaking about Vesuvius, 20% margins on that business. Blue Star saw very healthy growth, revenue growth of almost 20%. Something like a Spandana Spurti was very strong as well. AUM growth almost 70%. Any of these companies that you liked in terms of earnings?
Yeah, so I think a lot of these mid caps have come out with strong numbers with the likes of Spandana Spurti, where we have a very positive view for the entire MFI space. I think that is doing well and kind of seeing a good recovery. If you look at the numbers, that has been pretty strong. PAT was up 127% and 6% higher than our expectation, driven by the higher other income. NI grew 70%, which was in line. The company continued to pursue its customer acquisition-led growth with the addition of 350,000 borrowers, which is again a good growth. I think if you look at the core numbers, there hasn't been a healthy AUM growth, and in line with what we are seeing across financials, there is a minor compression in NIMs. But if you look at overall, we believe that the new management has successfully navigated through various disruptions and has led to the consequent improvement in the asset quality. And with the strengthened process, it is now ready to capitalize on the strong opportunity in the MFI sector. We are expecting ROAs to improve to 4.4% by FY26. And hence, we believe that it's a good stock, Spandana Spurti, in the entire MFI space. We have a target price of 1,100, which is almost 20% upside from current levels.
Okay, all right. Just stay with us, Siddharth. I think we're getting some commentary coming from the Bank of Japan. They've maintained, their policy stance, I think. So, no big surprise, I think, that's coming out of that. We'll try to get in further details. But I think it's just coming in the 10-year yield, I think, is what they're talking about. They're likely to keep easing patiently for price call and wage gains as well. So I don't think there's any big surprise. We'll try to get some of those lines that flash for you on the screen. Well, Siddharth, final question before we let you go. In a short while from now, we'll have the management of APL Apollo. That's been a big winner. The numbers were a little bit lower than what we were working with. Your view on the stock at these prices?
I think APL Apollo has been consistently delivering strong numbers. The space that they are operating in, they are almost like market leaders, and they have been consistently doing well quarter after quarter. So this was another quarter where they reported healthy volume growth of 12%. The product mix is improving. They have been consistently adding capacity. So we believe that with incremental capacity from the newer plants, plus the debottlenecking, plus the addition of high margin products from the Raipur unit, which should result in strong volume growth and margin expansion. So the good part is that the growth continues. We are expecting a revenue growth of almost 30% and PAT growth of 50% in the next 2 years. So I think it's still a top pick in the mid-cap space from us. We have a target of 1930, and I think the stock should continue to do well.
Siddharth, stay with us, and you may want to listen into the next conversation. Gokuldas Exports is on our radar. They reported numbers, and numbers do seem a little subdued for the company, which they reported earnings. Well, let's just quickly welcome in the management, which will be joining us in just a bit from now. I think we'll have the company joining us in just a bit.
Mr. Ganapati.
I think Mr. Ganapati is, I think, is he with us now? Okay, I think he is with us now. Mr. Ganapati is with us to take some questions with regards to the numbers. Mr. Ganapati, good morning. Great to have you with us here. Thank you very much for your time. So, looking at these numbers, I kind of go back to what you've been telling us, I think from the beginning of this year, that maybe towards the end of this year, a lot of the inventory in the US, etc., will start to get corrected. And that is when a real pickup will start once again. Is that not playing out, or did you expect some of that to play out in the quarter gone by? Because it doesn't look like that. Or are you expecting that to play out, say, in the October to December and the next and the quarter after that? Just give us a sense of where we are in that cycle.
Sure. So as I've always maintained, in the first half of this year, the inventory problem would be an overhang on the business, and we did face as expected. From the third quarter onwards, when we start manufacturing for spring of 24, and then in the fourth quarter go on to summer of 24, we've seen that most of the inventory-related issues in the with the brands have more or less dissipated, and the traction has really picked up. So our order book for the third and the fourth quarter seems to be very strong, and we've almost ramped up our manpower to cater to that. So we are on a growth from the third quarter onwards. Till the second quarter, we did have some of the inventory-related issues and the demand-related issues impacting us.
Okay, all right. Hi, Mr. Ganapathy. Good morning. So good to hear that the outlook is positive from year on. But what do you end this year with? At the half-year mark, you're a degrowth of low teens. What do you end this year with in terms of a revenue number? And what could be the broad margin band? Because now operating leverage will play out as you start growing again.
Right. So from a year-end perspective, our attempt is to try to at least come to the level of last year's revenue as far as Gokuldas is concerned. Keep in mind that we recently acquired a company in the Middle East with operations in Africa. So that would contribute to some incremental revenue in fourth quarter. So if I look at the company as a whole, we would probably have a reasonable growth in this year. About 10-12% growth YOY. But if you look at the base business, which continued from last year, I think we would be more or less at par. And that, in a situation where the global demand is down by about 25%, is a fairly strong performance, I would reckon. As far as margins are concerned, that's your next question. I think we currently, I believe that for the year, we will be somewhere between 12-12.5% EBITDA margin, and that's what I would reckon we will deliver. Our endeavor would be that over the next 2 to 3 years, we should be able to drive another 1.5% improvement.
Okay, so 12 to 12.5% EBITDA margins is what you're looking to clock in by the end of this year, and on an average, about a 10 to 12% revenue growth, right? Is what you're talking about?
Yeah, that's that's with the acquisitions as well, right?
With the acquisitions, got it. I think earlier you had also said that your peak revenue potential by FY26 is in the range of around 3,500 to 4,000 crores. Is that the level that you hope to achieve even now, or has there been any kind of change in that? And I mean, what would take you there?
No, so the current capacities which are coming on stream and all the strategic initiatives that we have taken will take us to those levels. So we are comfortable in holding on to those that kind of a growth.
Okay. And in terms of the Atraco acquisition, how is that coming along? When do you hope to see benefits from that play through?
I think it will take till the end of this year to conclude. We are awaiting regulatory approvals from Kenya and Ethiopia. So that's work in progress as we speak. My sense is that by December we should have a lot of most of that to be concluded. So fourth quarter onwards, perhaps.
Okay. All right. What about the big opportunity we have been talking about? UK-India FTA. As you mentioned, I think it's close to around $1 billion of an opportunity. What part of that pie can you capture, Mr. Ganapathy? And also, could you tell us when you expect it to come about finally? Because that's being pushed down. So the hope is it gets closed, but by when do you expect it?
So it's very difficult to guess something like this because it's a policy initiative, and there are FTA is not the only agenda which government of India is negotiating with government, the United Kingdom government. So there are multiple components to a trade agreement. So I'm not in a position to guess as to when it will happen, but my sense is that it should happen soon enough. And if that does indeed happen, I think FY25, we should, it takes a while for the FTA to play out in terms of actually realizing a duty-free access to the market. And if that happens, I guess we should see a fairly good traction for Gokuldas as well, because we're already working with two large UK-based customers, and we will see the traction grow up pretty significantly.
Okay, I just have one last question. In your commentary, in your press release, you mentioned that there has been lean demand from major brands. That's because they've been carrying excess inventory. But you're confident that there'll be recovery in the second half. How can you be so sure about the timeline? Is there a possibility of a delay in the recovery?
So some of the second half is evidenced by the orders that we already have. So we are already into the second half starting October 1st. So we are seeing that traction. That's number one. Number two, most of the spring summer inventory, the brands have more or less liquidated and have come to a level where they will have to now start ordering more in order to fulfill the market. Of course, the geopolitics continues to play, and the high interest rate regime in US could impact demand going forward. So those kind of market conditions may play out a bit, but from our standpoint, what we are actually seeing as orders in hand, we see, and I'm drawing strength from that. I'm drawing comfort from that. We are seeing a fairly strong H2.
All right, Mr. Ganapathy, quickly, just before we let you go, so you're expecting organically the revenues of this year to be as much as last year, right? As much as
we are trying our best to come at par with last year. It's an uphill battle, but we're trying our best to do that.
And including the acquisition, it'll be a growth of close on 10 to 12%.
That is correct.
Okay, good speaking to you, Mr. Ganapathy. So the past quarter is a bit of a disappointing one, but the outlook from here on is looking much better. As you said, order book as well is looking good. Margins are expected to improve in the coming years, and that India-UK FTA, whenever it gets signed, it's a big opportunity that comes on the table. But it's 9:10, so let's get into Sudarshan Sukhani, who's back with us to give us his 9:10 call. Sudarshan?
TVS Motors is a buy with a stop under 15.56.
Okay, and Mitesh, how about you?
I'll go with the buy on Reliance for a first target of 23.50 to about 23.60.
Okay, in pre-opening, I just wanted to mention one stock, Mangalore Chemicals. The stock should come up for you on the screen. It's in pre-opening, it's up almost about, I think, 7% or so. The numbers were very strong. So the revenue growth, the revenues have come in at almost 1,400 crores for Mangalore Chemicals versus 280 crores last year. There you have it 8% higher. And it's a turnaround quarter for them. Profits of 67 crores versus a loss of 30 crores same time last year. So just keep that stock on your radar. But let's go across to Nimesh now. There's a standout brokerage report of the day. Nimesh, what do you have for us?
Hi, Sonia. So today's standards in Pidilite. Goldman Sachs has to upgrade the stock to buy from sell. So technically it's a double upgrade, and they've raised the target price to 27.25 versus 23.50 earlier. Now, Goldman Sachs believes that the new growth drivers are emerging for Pidilite, and the earnings downgrade cycle is largely behind as far as the company is concerned. So they've increased the earnings estimate by 4 to 8% for FY25 and FY26 on the back of revenues increasing from new products, and also EBITDA margins improving on the back of lower input costs. So they expect the margins to improve for Pidilite from current 16.5% in FY22 to almost 23% by FY26. So that's the key reason for the upgrade. Now, the key two downside risks for the big call. One, the slower in the home construction, and two, a sharp increase in the input costs that can impact the margins. But from here, they believe there is a risk on the upside. So a big upgrade on Pidilite to a buy now from Goldman Sachs, and target price raised to 27.25.
Okay, thanks a lot for that. Well, the other stock that we're looking at this morning is TVS Motor. Very strong numbers, actually. Record high margins is what the company has reported this time. Let's just get the stock up for you. But there are some mixed views coming in. There's a bull and a bear view. Let's start with the bullish view. UBS has a buy with a target price of 1,900 on the stock, big upside to the current market price. Jefferies has a buy. They have raised their target price to 2,000 rupees on TVS Motor. They speak about how it's a record high margin performance. They expect the EBITDA to grow 25% compounded over the next 3 years till FY26. And they talk about how TVS Motor will continue outpacing the market both in the domestic as well as the export space. But there are some bear views as well. Citi has a sell with a target price at 1,050. CLSA has a sell with a target price of 1,200 and Nomura has a downgrade. The main reason for that is that the subsidiaries continue to be loss-making and TVS continues to invest in their subsidiaries, hence draining their cash flow. Also, the stock has rallied quite a bit and a lot of brokerages believe that the strong performance is priced in.
Okay, well, that is TVS in focus. Petronet LNG completely crashed in the last 60 minutes of trade. Diversification into petchem, large investments being announced. Sonal is here with that one. Sonal.
Thank you so much for that. Well, we did highlight yesterday that it was something that the street would take negatively, and that is something that we saw in the stock price as well. Brokerages too are bearish on the stock after this announcement. Jefferies, for instance, has downgraded the stock to an underperform. They've cut the target price to 180 from 300. They say non-core diversification at petchem with capex equivalent to their balance sheet size, it will alter the nature of company's business itself. They see Petronet LNG's balance sheet going from cash of around 6,000 crore rupees to net debt in the next 2 financial years. So that's a negative. They have lowered their EPS estimates for the next 3 financial years by 2%, 6% and 16%. Citi also has a sell rating on the stock. They've cut the target to 185 from 215 rupees a share. They say Petchem foray approved is at a much higher capex than what they were anticipating. However, second quarter was in line with their estimates. CLSA says that the management of the company has promised a detailed explanation on project economics in the coming days. So they are awaiting more details. But for now, till the time details are not available, looks like a risky investment and the stock will continue to be in focus.
Okay, thanks a lot for that. So lots of stocks in focus this morning, but let's head to the market opening now. We have, I think, less than a minute to go before the market opens for the day. Mitesh is still with us, so let's get a quick call in from him. Mitesh, your thoughts on 2 stocks, Tata Motors and HDFC Bank, the top gainers at the moment. Any thoughts?
HDFC Bank I'll take first because, there are now signs that the stock might have completed its correction. Though I think a big reversal isn't being signaled, but I think a good bounce back, giving you targets in the range of about 1525 to begin with, and, a good chance of us hitting 1550 also exists. So I think we'll play for a pullback rally over there. Tata Motors has been already in an uptrend. It gave a pullback for the last few days. Now is there some support range? It might give a bounce back, but I'm not very sure of trading Tata Motors as of now. I think between the two, I'll choose HDFC Bank.
Okay, well, let's now head to the market opening. Remember, it's expected to be a good day today. The Nifty has recovered almost 300 points from the 26th October low of 18,850. So that recovery is on track. We had good global cues as well. We have strong buying from domestic institutions. Brent crude has fallen to $88 a barrel. So all the, the ingredients are in place for a recovery to take place. But let's see how the second half of the trading session pans out because we have the FOMC decision tomorrow as well. All eyes will be on that. But some good quality earnings, whether it's TVS Motor, DLF, Blue Star, Vesuvius, Spandana Spurti, a lot of good numbers coming through today. So that could also support the market as we head into the first few moments of trade. There you have it, 68 points higher on the Nifty. The Sensex is up about 240 odd points and the Bank Nifty is up almost 200 odd points. What's leading from the front this morning? Good opening, by the way. All 4 indices in the green and the advance decline ratio well in favor of the advances. What's leading from the front is Tata Motors, Hindalco, BPCL, Asian Paints, Cipla, Bajaj Auto and Bajaj Finance. These are your top gainers on the index. Apart from that, Hero MotoCorp, by the way, numbers tomorrow. Ahead of that, the Hero is up about 0.6%. Nestle India is up about 0.5%. HDFC Bank, BPCL and Coal India are a couple of other stocks that are trending in the green right now. It's a decent opening, but there are also some losers. UPL is down about 1%. Bharti Airtel ahead of its earnings is down about 1%. M&M is down 0.5%. Britannia, ONGC and Titan are also a couple of other stocks in the red this morning. So not a bad opening at all. Nifty up about 60 odd points. Lots of interesting stocks in focus in the broader markets. DLF, Blue Star. Blue Star, in fact, is up 5% right now. So good set of earnings coming through. Nigel, it's the mid-cap space where there's a big party going on.
Well, that's right, Sonia, and that's good to see because yesterday actually that index was underperforming. Let's run you through a few stocks that are doing well. KPIT Technologies, we'll have the management in a short while from now. Yesterday the stock ended higher. Today it's up closer on 2.5%. Pidilite is up closer around 4%. That one's flying away as we speak. A couple of other notable big movers. Suven Life, big volumes out there. That stock is up closer around 8%. On Inox Wind, there's a large trade that's taken place, and that's why that stock is down close to around 6%. That's flashing for you at the bottom of the screen. We'll try to get you more details on that front. So that's down close to around 6% odd. Few more big gainers. Mangalore Chemicals, stock is doing well. Vesuvius, we told you the numbers are good. Volumes are still on the lower side, but that stock as well is up close to around 8%. DCX Systems, well, they as well delivered numbers. That stock as well has opened well in the green to kickstart trade. And CMS Info Systems, post its numbers, the stock had pulled back close to around 355 odd. As we speak, you have CMS Info Systems that's now up close to around 6% or thereabouts. So that's recovered all of the losses we saw post its numbers and moving pretty well. Siemens is well under pressure. That's down close to around 1.5%. Prashant, what else?
Nigel, so the market's actually given up some gains, right? It's only about 45 points higher. KEI is down 4.5%. So stocks at about, 2370 or so. And it's got decent-sized volumes. Gokuldas, the management was just with us. I mean, the pre-open was indicating a 6% cut. It's down 7.5%, about just under 800, 793 or so on Gokuldas. It's been a big outperformer even before that acquisition and post that acquisition as well. But now it's down on the back of the numbers. Surprise sort of contraction there. You got Pidilite, which is up 4%. Nimesh was just highlighting that upgrade which came through. What else? CMS Info we highlighted. Jindal Saw was a big mover yesterday. It's up another 3.5-4% this morning. Ujjivan Small Finance Bank. By close, I think Ujjivan was down yesterday. It's up 3.5%. So there is some recovery which is coming through on Ujjivan Small Finance Bank. There is Suvain, which is up about 4%. NCC is up about 2%. But volumes are still a little on the lower side. Macrotech is up about 3% or so, 780. Daawat, which reported numbers, I think, yesterday or day before, that's up about 2%, 166, decent-sized volumes. So things are opening up, but it's a little participation, at least it's not, huge out of the gates, right out of the gates. Maybe it'll pick up. The Nifty is tapering as we speak. It's about 30 points, 35 points higher. So we are at 19,175. Let me just mark the day's high. The day's high was made at 19,233. So we're about 60 points off the day's high on the Nifty as things stand right now. Anand Shah is with us, head of PMS and AIF investments at ICICI Pru Asset Management Company. Anand, good morning. Great to have you with us here. Thank you very much for your time. I know you look at slightly longer term trends, but I do want to get a sense on the slightly near term from you. Do you have a view whether we're in the midst of a bit of an ongoing corrective phase for the market? And would you say that the go-go phase, which was every small dip getting bought and the market rebounding back to new highs, that is now behind us for sure? What's your sense?
Hi, very good morning, and thank you for having me here. So, look, to be very honest, we didn't have too much of a support from the global markets. We are fairly aware. 2022 went into the Russia-Ukraine conflict, and more recently we have another conflict up there, plus tightening of interest rates and higher interest rates in US. There is an imminent expectation that the economy should slow down there also. So there has been a destocking cycle. So the global markets and China, of course. So global markets have been challenging. And in midst of that, the Indian economy was chugging along, and obviously the markets were also doing very well. So rightly so, we've been doing well against many odds. Now we are reaching a stage where India will also enter into some bit of a scenario where we will have state elections followed by general elections, and to that extent, there would be a little bit of uncertainty in the domestic front also. Though it might not have any longer-term impact, but as you rightly asked me, the near term will remain a little more muddled than it was 6 months back, given that we don't have global cues which allows the market to go up convincingly.
Okay, by the way, just want to point out, after the rally yesterday, KPIT Technologies is seeing an additional 5% rally today. Remember, the company raised its full-year revenue and margin guidance for FY24. They now have a constant currency growth outlook of 37%. So KPIT Technologies is a 10% rally in less than 2 days that this stock has seen. Anand, hi, good morning and thanks for joining in. How are you feeling about the IT space now? It's a mixed bag here. There are some companies that still talk about slowdown, client delays, etc. But then there are others like KPIT Technology that are raising their guidance. How are you feeling now?
Yeah, very good morning again. So yes, that's been the case. Many small and mid-sized businesses across the sectors also been able to tide over a little bit of slowdown, a little bit of uncertainty better than the large businesses. So yes, large companies are directly impacted by slowdown in overall IT spending. And we are seeing that in the large businesses, the Infosys of the world and others, where the numbers are soft, but at the same time, even the guidance has been softer. What is happening in mid-sized businesses, small-sized businesses, they're able to get a couple of contracts here and there, or they are able to, overcome some loss of business from existing clients through newer wins. So yeah, it's more bottom-up from here, especially in small and mid-cap businesses, sector-wise, across the sectors also. That's the case, whereas the large businesses will have to depend on macros. And those macros, as I was saying just a while back, remains challenging for a time being.
Okay, hi Anand, good morning. Anand, what's your view on real estate? We had Mr. Abhishek Lodha yesterday who joined in, and he says that typically we see a real estate cycle of around 15 years and we're just in year 3, so he believes there's a big runway ahead. What's your view on that space? I mean, view on real estate, and how would you play that theme, if at all? Would you play it by the core developers? Will it be some of the ancillaries, or maybe the housing finance companies?
Yeah, so I think it's a foregone conclusion that India needs more housing, and housing would remain a very, very large pillar for not only the private sector investments, but even in terms of job creation. It has its own virtuous cycle. It is one of the largest employer in that sense, and it's all pervasive impact on various industries. So you're right, there are many sectors which will benefit as real estate picks up. I think something which is sort of a little bit always in case of India impacts the cycles more often than not is a sharp increase in the prices. I think for this real estate cycle to sustain far longer, I think we need supply, and we need enough and more supply so that the prices don't run up. Indian real estate prices compared to our per capita income is already very, very expensive in various large cities and towns. And to that extent, one thing for this real estate cycle to sustain is benign prices. I think incomes are growing, but incomes are not growing rapidly. On top of it, if you see IT sector particularly, which contributes very largely in terms of organized workforce and among the people who can buy luxury houses, there we are seeing for last couple of quarters slowdown in terms of new hirings as well as net employee count. So I think the key factor would be the prices. Prices have to remain benign, and to that extent, the supply should sustain. Otherwise, demand is always there. Yes, again, which sectors? I think sectors across the board will benefit, but we'll have to also keep an eye in terms of what is the competitive intensity. In many of these businesses which support housing, we are seeing increased competition. So despite of demand and increased competition, rightly because demand is growing, one need to be very, very clear that the margins can be under severe pressure. So it will be more bottom up. You will have to identify businesses where profitability can sustain at current or can also improve if participate in the overall growth.
So Anand, how are you feeling about autos now? Because we've had some really good numbers, right? Whether it's Maruti, whether it's TVS Motor, record high margins. Of course, raw material prices are also softening, but demand is picking up. So it's sort of like a blue sky scenario for the auto companies. Is this a multi-year upcycle that we're looking at?
Again, we have seen a sharp volume improvement, and that was expected, given that there was artificially some sort of slowdown, given there was semiconductor issues. So volumes have come up nicely for at least a couple of companies who have been able to improve volumes. raw material prices have been benefiting, and to that extent, margins have also expanded. I think what still ails the sector and that keeps us a little bit cautious on this sector is twofold. One, interest rates remains elevated, and to that extent, that's one negative. Oil prices always, again on the back of two conflicts going around in the world where we have a supply of oil coming from. So any sharp spike in the oil prices can hurt. And the last, but more structural, is the transition from ICE to EV. So that also is a big headwind which many of these companies will have to tackle, well into the next decade. So all these factors makes us, a little bit more cautious and more bottom up rather than top down on the auto sector.
All right, Anand, what about the pharma space? Out there you're getting a couple of earnings surprises. Cipla did pretty well. You had Piramal Pharma. So some of these names, actually, the pharma index on the whole has been a big underperformer if I take a look at it, a 5.5 year horizon. But it's been showing some kind of a pop, particularly in the last 12 to 18 months. Do you believe there is further upside from here? Maybe the worst of pricing is behind, supply side issues as well getting resolved?
Indeed, I think pharma has to be really bottom up. Many a times you would love to have an answers which are more generalized, more sector specific. But pharma, each company is very uniquely poised. There is no, at least for now, obviously there was an early phase in the sector when US generics was just taking off. India didn't have large share, and to that extent, broadly, all the companies were benefiting as they were entering US generics. Now we have reached a phase where people have different business models, they have different exposure to US generics, domestic pharma. And to that extent, each of these businesses are very different and very unique. And that's why the performance is not very, very homogeneous. And that's why it's very difficult to give you a view. Even then, if I were to try and give you an overall view, I think the pressure which was there, the pricing pressure, the intense pricing pressure which was there in US generics in general, seems to have subsided a little bit, and that's been a respite overall for the sector.
Anand, just to talk from shift from secondary to primary markets, the Mamaearth IPO opens today, right? I'm sure you've met the management, or your team has met the management. What are your first impressions?
I think again, each IPO is unique. It's to be evaluated bottom up. Obviously, the information available in the secondary market is much more, and the history is available, which is a lot longer. And to that extent, the primary markets will always remain difficult. On top of it, what we've been generally as a fund house, been very, very conscious of the valuations which are coming through in these primary markets. We've been on record saying, convincing consistently that the valuations, one needs to be again very careful of what price one is paying. The primary markets, to us, believe is fairly rich in pricing, and to that extent, each company will have to be evaluated.
Okay, you gave us an answer without saying very much about this particular situation. But Anand, just a quick word on the Paytms and the PB fintechs, and actually those two more than anything else. There's a lot of interest now, especially now that many are near that profitability threshold. It's visible. Zomato, of course, is the third one, the trio.
Sure.
Do you own any of those? Which ones do you like and why?
No, so again, as this entire market is now poised where there's not much discovery left. And I'm just not talking about the tech companies or a fintech companies or these innovators, but across capital goods, across industrial products also, we can't really say that now the market is undiscovered, and to that extent, a lot is yet to be, a lot of growth is still mispriced, or there's a lot of value left in the market. So my answer to investors in general should be, from here on, it will be not easy. One will have to be very, very careful on what you are investing in. Stock picking becomes that much more important as there's been a significant price discovery on many of these companies. Coming to specifically your question, I think the innovation businesses are the trickiest, I would say. even for professional fund managers like us, it's not easy, and we will have to continuously learn and evaluate them. And on top of it, there has been disruptions, or even the disruptors have got disrupted. Look at UPI. UPI per se disrupted all the sort of income which was possible through transactions. And even today we are looking at credit cards, debit cards also, suffering as UPI has just removed one large revenue stream. So again, I'm repeating, these businesses are difficult, they're trickier, and to that extent, you need a lot of research to understand them. We've been fairly cautious on these names.
Yeah, got it.
We've avoided many of these names.
Okay, Anand, always good hearing your thoughts. Thanks so much for stopping by and filling us in with your view on the markets. Looking forward to having a chat with you rather soon. But let's focus on APL Apollo Tubes. Well, those numbers are pretty much in line. Realizations came in flattish on a sequential basis, which was a pleasant surprise. The product mix as well did hold them in good stead. What's the way ahead? We're joined by Mr. Deepak Goel, the Director, Operation and Group Chief Financial Officer, who joins us on the show. Hi, Mr. Goel. Good morning. Thanks so much for joining in. Well, earlier you were talking about volume growth of around 25 to 30%. But now it appears you're likely to hit the lower end, maybe a 25% growth. Tell us why. Is there some kind of softness in demand? Point number one. And also the Raipur unit, well, that's ramping up nicely. How do you see the utilization levels or, in tonnage? How does it improve from here on?
Yeah, in the H1, our growth is 30% year over year. And we are looking the same growth momentum in the H2 also. In the past, we also seen that H2 is better than the H1. But due to some festival seasons and some fear for the price corrections, there is some softness in the Q3 first half. So we are seeing in Ajay Mahan, this softness is we observed, and after that demand will very sharply pick up. So we have very comfortable. We maintain our volume guidelines of 2.8 to 3 million tons for the FY24.
But now it's likely to be at the lower end, right? Now it is likely to be 2.8. Okay. Mr. Goel?
2.8.
Yeah, so you're likely to end at 2.8 rather than 3 million tons. Is that correct? You'll be drifting to the lower end of the guidance?
It's due to in the month of October or November, we are seeing some pricing pressure or soften in the demand due to the regional sales prices are a little bit low as compared to the HR coils. That's why we are seeing some softness in the demand.
Got it. Okay, so Mr. Goel, you're likely to do in the range of 2.8 to 3 million tons, but going by your commentary, maybe it could be to the lower end. Also, what about the Raipur unit? How do you see that ramping up? I think you were guiding for around 100,000 per quarter. Will you do that in quarter 3? And given that the Raipur unit will ramp up, what does it mean in terms of EBITDA per ton? Closer to around 5,000 rupees?
Yeah, in the Q2, our volume utilization is 40%, and it will be gradually ramping up fastly. In the thicker coated sheets, our volume utilization is more than 50%. So in the Q3 and quarter on quarters, it will be improved. By FY25, we will be achieve 80 to 85% capacity utilization in Raipur unit.
Okay, and the EBITDA per ton?
EBITDA per tons will be in the range of our earlier guidelines, in the range of 6 to 7,000 rupees per ton.
Oh, okay. 6 to 7,000 rupees per ton. Just a couple of more questions. You said that for the Raipur unit, yes, we got that. Yeah. You said you maintain your volume guidance of 2.8 to 3 million tons, but you also spoke about a slowdown in the market. Is this only in the domestic market that you're seeing a demand slowdown, or are you noticing it in exports as well? And what is the contribution, what is the outlook on the exports business over the next 1 year?
In the front of export business, we are very bullish. In the export markets, we are expanding very sharply. And for the next quarter ends, we will come up with our Dubai units also. So we are seeing 10% sales volumes will be covered from the export or Dubai units by FY 25 or 26 maybe.
So 10%, that's what you had targeted earlier as well, exports as a percentage of sales once your capacity ramp up is completed. But in terms of the absolute growth, what are we looking at on the export business? What is the growth trajectory that you can expect over the next 2 years since demand is picking up?
Yeah, it will be 3 times of the at present sales volume. Currently, we are doing 1 lakh tons of the sales volume yearly basis. So we are looking for the at least 3 lakhs in the next 2 years.
Mr. Goyal, good morning. This is now heavy election season, state elections, etc. Does it have any impact at all? And then there's general elections next year. Is there usually, do you see any slowdown? I mean, other companies we've spoken with in this, not exactly your segment, but on the companies like you on the infra side, they tell us that orders get bunched up before the cycle begins, and then there is a bit of a lull for a few months. Is that what you see as well?
No, sir. No, we are not seeing any demand pressures due to the elections. We are very bullish due to the elections also, because at the end of the before starting the election seasons, a lot of the government's orders and very good demands for the project segments will come up. So we are bullish for the elections.
Okay, all right. Give us a couple of more details then, sir. The EBITDA per ton on a consolidated basis for this year will be 5,000 rupees, right?
Yeah, we are targeting 5,000 rupees, sir.
Got it. And also your ad spends, I'm looking at it, a lot of these stars you all have signed up, whether it is Mr. Bachchan, Akshay Kumar, I think Tiger Shroff as well, you all have signed all of them on. So what was your ad spend say in the previous year, and where is it likely to head to because you have done these big signings?
Yeah, in the past, our ad budget is around 20 to 30 crores only. So this year, and for the next years, we are doubling it. And we are going for the aggressive advertisements campaigns. We will cover TV hoardings, flex boards, architect meets, customer meets, builders meets.
So Mr. Goyal, so Mr. Goyal, you're talking about normally the ad spend is around 30 crores. This year you'll end at around 50 crores. Did we get that correct?
Yeah, 50 to 60 crores.
Final question, the street, they like your business, they like what you'll have done. They're only a little skeptical about the promoter entity because there could be some funding that's required for the promoter's NBFC unit. Any further stake sale from the promoter entity or that's done? And is the NBFC well funded now?
It's done, sir. It's well funded and it's growing greatly.
Okay, all right. So no more promoter selling, right?
No more promoters.
Okay, all right. I think the street would love to hear that. Thanks a lot for joining in. Appreciate your thoughts. That's APL Apollo. But let's move on now. KPIT Technology is a stock on our radar. Very strong numbers from the company. The dollar revenue growth has been quite strong. But the most important bit is they've raised their FY24 revenue guidance to 37%. Kishore Patil, the Chief Executive Officer at KPIT Technologies, joins us now to talk about that. Mr. Patil, thanks so much for joining in. This is a very tough time for a lot of your peers, right? But at a time like this, you have come out and raised your guidance. So that's given extra confidence to the street. Tell us a little bit about that. You're already tracking at a 50% growth in the first half of the year. You've raised your full year guidance, revenue guidance to 37%. So what do you expect in the second half? And where are you seeing a pickup in terms of demand?
Yeah. Good morning to you. So I think this is not about one quarter. It is about the consistent strategy which we have been following for last 3-4 years. So I think we have got few things in place, right? I think first we had a very sharp focus on the new technology domains, which we have been talking about. So that is a one part. The second is we establish very strategic relationship with the companies who are committed to spend in this new technology area over many years. So that is the second part we did. And third, we invested into building new offerings in these technologies. So I think this is all is coming together. And in addition to that, at the beginning of these years, as you know, we signed some bigger engagements with our clients. So that gives us the momentum to go for the first half and then naturally sustain it to getting into the next half of the year.
Sure. So, Mr. Patil, can you just elaborate a little bit on this new technology domain? Because I'm trying to understand, since you have the commitment from clients to spend more in this arena, what does this mean for your operational performance? Because you've clocked in about 20% margins in the quarter gone by, the best that we've seen in recent quarters. Can you build on to this, and what would the exit rate be for margins in FY24?
I think, so let me just talk about, I mean, we work in typically 3-4 domains, and the one which really grew fastest was the architecture, the vehicle architecture, operating system, middleware. That's where we have been investing for a long time, and the technology investment we have made, apart from, of course, autonomous electrification, etc. So I think these are the two areas which really gave us this significant growth in the last 6 months, and will continue to give that. Now, from the margin perspective, our philosophy has been we will keep a margin. Earlier, I had mentioned between 18 to 20%. If 3 years back, if you go back, that's what I said, that margin will be between 18 and 20. As we get comfortable, we will, everything beyond that, we will reinvest into technology. So now we are saying that we will have the margin at around 20%. We'll invest everything beyond that into new technology or investments for growth. And as we become comfortable, we'll naturally are in a better position to improve the margins. So that's where we are. So that's why we feel confident about it.
Mr. Patil, hi, good morning. So 20% margins now, right? And beyond that, you said you will put it back into the business, invest in the business. So just a quick word on the deal wins, which actually, we're looking quarter on quarter, but it has come off. So $156 million as compared to, this is TCV, as compared to 119 the previous quarter. Could you tell us what happened?
No, I think we don't really look at the deal wins. So to tell you frankly, our business is a bit different. We have a certain set of clients, and we continue to engage with them over longer term. So during a particular thing, the business can get closed or not, but we get a better visibility over next 3 to 4 years, basically based on their spend over this period, these large programs. That's how our visibility comes. So there are quarters when it comes a little bit less and a little bit down, but basically what we are more concerned about is the medium programs which the client has and what we can do. So for example, at the beginning of this year, we said that as the environment is, we would like to accelerate our spend so that we can maximize the growth in the first 6 months. That's exactly what we did.
All right. Hi, Mr. Patil, and congratulations on a good showing. You're standing out in terms of revising your guidance as well as the momentum. Now, currently, you're clocking close to around, 590 to around $600 million. If I try to annualize the numbers that you're doing. By when do you get to around that $1 billion odd mark on an annualized basis? When do you get to that run rate? Which year?
So, Anna, I think we are doing our best. We said we see a very medium-term, very good growth. We said that our goal has been always to continue with the momentum. So I am not putting any goal to it, but I can assure you that we will maximize our opportunity, which is there for long term, and we are very well positioned to do that.
Mr. Patil, let me try to egg you on a little bit. You're doing close to under $150 million approximately. You leave the $1 billion, that'll be $250 million. On a quarterly run rate, when do you get closer to around the $200 million?
So I guess I don't want to give any answer on that question. But
is
as
it
you
possible
can see,
towards...
we have been growing around, if you look at it, around 5 to 7% has been our growth. For some quarters, 5%, some quarters less. So anywhere between 4 to 7% has been our growth per quarter for many quarters, if not more. For example, this was a special quarter.
So by quarter 4 FY25, it's possible then, going by this run rate itself, that you're closer to around $200 million.
I mean, if you say so, That's your prediction.
That's the best answer, right, to every question if you say so. But if you can tell us a little more about what's happening in the commercial vehicle and passenger vehicle business, because that was a big growth area for you. And even if you go by what we saw in the last quarter, right, Mr. Patil, you've done over a 22% growth in the commercial vehicle business particularly.
Yes.
Can you build on to that momentum? And what about passenger vehicles?
Yeah. So I'll come to first passenger vehicle. I think there are, I have also talked about certain macro factors which we have to be aware of, right? While we had a very strong set of numbers, we don't want to be blind to what is happening, whether it is about, certain sales in the EV segments being little softened, the consumer sentiment, the economy softness. So we are aware of all these areas. Now, the point is, in these cases, what we have to see is in the medium term, all our clients, of course, everybody is committed to electrification, everybody is committed to autonomous, everybody is connected to connected and other things. What is that we can help them to reach there and solve their current problems? So that is exactly what we are focusing on right now. So to that extent, go to the commercial part. I think the fuel cell, their electrification journey is different than the past car. They have to do the fuel cell, etc. And we have already working on such production program for some large commercial vehicles, which allows them to really bring this into technologies into production and integrate them. So I think our objective is have these long-term trends and keep a very close eye on what our clients are doing, where there is spend, where are their problems, and trying to come proactively to solve them.
Okay, I think that's the best way to approach it, right? Sir, just before we let you go, we're running short of time. You have about 500 crores of cash on your books. Any more acquisitions that you're looking to do?
I need more cash actually on the books.
But
I'm sure that will come eventually. So you're saying that there is scope for acquisitions in the next 1 year?
Yeah, I mean, I think we are more focused on organic growth for now. In the current situations, we would really like to conserve as much cash as we can. So that's how I would look at for now, for KPI.
All right. We'll leave it there, Mr. Patil. Great speaking with you as always, and pretty confident out there in terms of growing business, long-term relationships, and maximizing that opportunity out there. Thanks very much. 10 points lower on the Nifty. We're at about 19,130. Market breadth is 3:1 in favor of advances. And we'll come back after a quick break. There are more managements lined up on the other side. We have the management of MGL joining in, Mahanagar Gas joining in to talk about their second quarter earnings, which came through. After that, we'll be joined by the management of GE Shipping coming in as well.
Co-presented by...
Okay, welcome back. So you got the market, which is down, off the highs by a lot actually. So it gone into flat territory for a while now. Let's focus on the next management. MGL, that is Mahanagar Gas, reported second quarter earnings, largely above street expectations. Growth's been led by lower gas costs and volumes have also surged both on a year-on-year and a sequential basis. Mr. Ashu Singhal is Managing Director at MGL. He's joining us right now to take some questions. So good morning. Good to have you with us here. We'll get to the second quarter performance, numbers, etc. in a bit. But what actually has been the big focal point has been what has happened in Delhi with regards to policy on the EV side. And a lot of investors have extrapolated what's happened in Delhi to saying, well, something similar is going to happen in other states as well. In Maharashtra, for example. There is, of course, a draft EV policy in Maharashtra. There are analysts who track your company who says that if that were to be implemented if the draft were to become law, it would hit your volumes by about 12 to 15% or so. Could you tell us where that draft policy is at right now? Because you would be in touch with, government officials, bureaucrats. What's going on there, sir?
See, first coming to your comment about the policy which has come out in the Delhi region, NCR, and secondly about the draft policy which is in the Maharashtra. So NCR is a different market and Maharashtra is a more open market. NCR is more policy-driven market. So they are slightly different because most of the policy-driven initiatives are more stringent in NCR as compared to Mumbai. Mumbai is more commercially driven market based on economics. The draft policy of Maharashtra, if I am correct, I'm not very clear on that, but in 2019, they have prepared the draft policy and it is yet to be, accepted by the government in Maharashtra. So it is still in the draft stage, as far as I understand.
Has there been any movement, though, Mr. Shingle, on that or no? I mean, obviously not, right?
Not very much aware about it.
And you don't think it'll come up anytime soon? I mean, that is your best case reading.
It can come, but as you said, that some analysts have given a number of 10 to 15% impact on our volumes. But the numbers which we have in our knowledge about the draft policy is that it is much lower as compared to the targets which have been given by the policy in Delhi. So maybe by 2030, it is around 25 to 50%. In this range, it is gradually going to increase in a gradual manner, whereas the policy in Delhi speaks about 100% conversion of new vehicles sale of EVs by 2030. So Maharashtra policy is on a lower side as far as the targets are concerned, which is again a draft side. So when it comes, then only we'll be able to see that how it impacts us.
But I think the bigger risk, there is a potential risk to your long-term volume growth, right? Because of this transition that we're seeing to EVs, which is an eventuality. I think that is the big concern that the street has. How do you plan to sort of combat that?
See, I will answer this question in a different manner that, okay, electric vehicles are going to come on the roads. There is no doubt about it. But if you see the data, almost 90% of electric vehicles as of now in India is primarily two-wheelers and three-wheelers. So the segment which is going to impact will be two-wheelers first. And as of now, CNG, there is no CNG vehicles running on two-wheeler side. Three-wheelers also, the offtake of the per vehicle is much less. And as compared to the new avenues which are available for CNG vehicles in the commercial side, the uptake would be much higher as far as that's how we see it, because more and more CNG stations are coming on highway. So a lot of floating population of commercial heavy vehicles are going to come up, maybe 15 to 18 tons of vehicles, which takes more CNG in one fill. So the upside can come from that side. And electric vehicles in fleet or aggregator, it is around our 20% volume is there, 15 to 20%. So we don't expect that all of it will go back to EVs. Part of it will go to EVs and part of it again will continue running on CNG.
Okay. You also, you've been talking about diversification, some other acquisitions as well, trying to be a part of the EV value chain. We've spoken about this ad nauseum in the past. Now that this whole electric vehicle adoption is becoming a reality and, it's moving at a very fast pace, can you tell us at MGL's end what kind of diversification or how can you become a part of sort of this value chain?
It is still being explored. We have not yet taken any firm decision. As a part of strategy document, we have explored several areas, one of them being electric vehicle value chain or e-mobility. So we are exploring some potential targets, and as and when they mature, we will announce it to the market.
All right. Hi, sir. Good morning. Your volume growth was only around 3% in the second quarter, but you've been talking about 7 to 8% volume growth for this fiscal. Do you hold on to that number? While on the flip side, the EBITDA per SCM, well, it's much higher than what you've been guiding for, that 8 to 10 rupees. Do you want to revise that number upwards?
Yeah, maybe slight correction, not 7 to 8%, but 5 to 6% will be more reasonable. And if you see quarter on quarter, we have grown by 5% in the volume. So we expect that for next 2 quarters also, the volume growth will be maintained at 5 to 6% or 5 to 7%. So on year basis, again, we expect 5 to 6% on the volume side. As far as EBITDA margins are concerned, EBITDA per SCM, we expect, since 2 quarters have gone out very nicely, and we are around 14.5 rupees per SCM. So going forward, the next 2 quarters, if it comes down a bit, so we expect around range of 12 rupees or so. So 10 to 13 rupees would be more appropriate to take EBITDA margins. So slightly upside will be there on EBITDA. But it all depends on the gas prices, because in winters, again, the gas prices are expected to rise. So we never know what is the procurement. Slightly exposure will be there on the procurement side.
And how are LNG prices panning out currently? Any price cuts that you're looking at?
Price cuts? No, we have recently announced 3 rupees CNG price cut on CNG rupees per kg, and 2 rupees per SCM on the PNG side. That was done once HPHT prices were reduced by the government of India from around 10 rupees, $10 per MMBTU to $12 per MMBTU to $9.9 per MMBTU. So part of it, almost all of it was passed, and part of our higher EBITDA margins were also shared with the customer, because the focus is also on to increase the volumes.
So just one number, what percentage of your volumes right now comes from taxis and autos? Would you have that number?
Around 20%. 20% from taxis, and maybe another 15% from autos.
Okay. Got that. Thank you very much, Mr. Shingal. Appreciate you joining in. And I love that reference that you made right at the beginning, which is, Delhi is business. Delhi is government policy, and Mumbai is...
Delhi is more stringent with the policy-driven initiatives, whereas Mumbai is more economics and commercial-driven. It's called commercial capital.
Absolutely. Yeah. Thank you very much, Mr. Shingal. Appreciate you joining in. And a great conversation as always. Guys.
Okay, well, thanks a lot for that. That's Mahanagar Gas. But getting back to the markets now, the Sensex and Nifty have slipped into the red. GE Shipping is one stock that has reported a soft quarter this time, actually. The business environment for the company has been on the weaker side. Their revenues declined, margins contracted. G. Shivakumar, who is the Executive Director and Chief Financial Officer at GE Shipping, joins us now to talk more about that. Mr. Shivakumar, good morning. It was almost a 15%, over 15% decline that you saw in your top line. Just trying to understand, what is the outlook for the second half? Are you expecting to see any recovery? And what was the major reason for the decline this time around?
Good morning, Sonia. Thank you for having me. Yes, we had a weaker quarter than Q2 of last year. This year's relative weakness is to do with seasonality. The tanker markets, typically Q1 and Q2, which are the summer months, tend to be weaker than the winter months. Last year, we did not see that seasonality, and that's why we had a very good Q1 and Q2 last year. And that's why we are down from the previous year. As it stands today, the markets, crude tanker markets are stronger than they were last quarter. Product tanker markets, not so much. So that's where we are. So typically, we would expect strength to come in over the winter months for the tanker market, which is a majority of our fleet. So while the results were worse than last year, it's more to do with last year being an unusually strong Q2 for the tanker markets.
Okay, all right. Hi, good morning, Mr. Shivakumar. You know, the NAVs have gone up, clocked more than 1,000 rupees after a very long while. But the order book to fleet ratio, well, that's still relatively lower. I wanted your sense. Are we in a super cycle?
Yeah, I don't like using that word. But
I mean, just going by the data points, you know, I'm just looking at that ratio, and we briefly spoke about it the last time as well.
Yeah. So, yes, the fundamentals are lining up very well. The order book is very low in the historical context. Asset prices are pretty high, and this is the first time actually that we've crossed 1,000 rupees per share in NAV, standalone NAV. So asset prices are very high and order books are very low, and therefore, and leave aside the asset prices, order books being very low is pretty good for the outlook for the markets, at least from the supply side. Now, what happens to the demand side is really difficult to assess. There are a lot of pressures building up on economies, on consumption of commodities. We'll have to see how that plays out, but we know that one side of the equation at least is in our favor.
Okay. Mr. Shivakumar, hi, good morning. Two questions. One, what's the outlook for dry bulk? That is one. And second, as you said, I mean, there are pressures economy-wise speaking. There is this situation in the Middle East, etc. as well. Have you seen any ripples because of that on the crude or the product side at all, or not really?
Yeah. So first on dry bulk, morning, Prashant. The dry bulk is mainly a China play. Chinese steel consumption has been pretty weak, but on the other hand, they've been producing and exporting. Iron ore imports have gone up quite a bit this year. Coal imports have gone up a lot during this year, but that was mainly to do with their hydropower issues. It's tough to call. In last couple of days, we've seen some murmurings again about a stimulus and how they're going to increase their deficit and do some stimulus package, some kind of stimulus package. So let's see how that plays out. That will be a significant factor for the markets. We also have some supply side issues, which is to do with congestion at the Panama Canal, to do with congestion at the load ports in Brazil. So all of those things on the margin are helping to keep the market reasonably firm. On the tanker markets, there's nothing that we can put as causation for markets, and markets have gone up quite a bit. Crude tanker markets have gone up quite a bit in the last 2 weeks. We don't know why. It could be a little bit of nervousness around this Middle East situation and people trying to stock up, but rates have gone up quite a bit for crude tankers in the last 2 weeks.
How much, sir?
While it's tough to put, so what used to be, say, for a Suezmax crude tanker, $30,000-$35,000 a day, is probably $55,000 a day in the spot market now.
Okay, we'll let you go on that note. Sure. Thanks a lot for joining in. Sorry, we've actually run out of time, not out of questions, but we'll definitely touch base with you again. We'll slip into a quick break on that note. On the other side, we'll put focus on the commodity markets. Manisha Gupta will be joining in. Stay tuned. Is here with us to give us a quick comment on what's happening in that world. Manisha, over to you.
Thank you for that, Sonia. Well, I'm looking at the crude oil prices because this continues to be volatile. The only upside or positive to crude is that it has been trading within that range. So when you look at the overnight markets, we've seen 3% of gains come in for the crude oil prices. For the month of October as well, it is negative by 3% that the crude seems to be performing right now. Well, the markets are watching out for the monetary policy meetings. The US Fed two-day meeting starts today. And you also have Bank of England coming in on Thursday. The Bank of Japan already has come today and spoken, and there has been no change onto that one. This is on expected lines with the bond yield targets at around 0%, and there has been no change in the interest rates there as well. So that is something that the markets were already anticipating. What hasn't worked well really is the Chinese manufacturing numbers. Well, we have seen that continue to decline, and that clearly indicates towards a fragile recovery coming in from that major consumer for the crude oil there. Manufacturing numbers at 49.5 are much lower than 50.2 that we saw in the month of September. Also, when you look at the services data, well, that's the lowest in last 10 months. Doesn't augur well for many of those industrial commodities there. When you talk about the crude prices range for the month of October, it has been a big $8 to $10 of a range from 82.5 to 91, and that's exactly what we seem to be trading now at this point in time as well. If you look at the World Bank report that came in yesterday, it says that for the fourth quarter of 2023, that is where we are right now, the global prices could average at around $81 a barrel. But the World Bank also cautions that if there is escalation in the conflict and there is a severe disruption in the crude output, then you could be looking at $157 a barrel of an upside as well as a worst case scenario coming in for the crude oil prices. So let's take a look on what various banks and brokerages have been putting out as a fourth quarter average expectation that they think. Wood Mackenzie has been steadfast on $88 a barrel, and that's exactly what we seem to be trading at this point. Bank of America has talked about an average of a $90. 90 to 95 is what Fat Profits also told us at CNBC-TV18. And then there are some higher averages as well. 94 is what Saxo Bank told us. 100 and 105 is what Probus Securities and Goldman Sachs seem to be talking about. $100 a barrel actually is a level that many banks are talking about right now. ANZ in a report has suggested that the fourth quarter may lead to higher prices going forward in 2024 as well. So most banks and brokerages seem to believe that 80 to 105 of a big range is what you could be looking at in this current quarter.
Okay. All right, thanks a lot for that, Manisha. Well, let's slip into a quick break. On the other side, our special segment, it's the economy. Lata will get chatting with Abhishek Upadhyay of ICICI Securities Primary Dealership and Samiran Chakraborty of Citi to discuss how much the awaited RBI's announcement on OMO sales will be received by the market and its impact on yields. Stay tuned.